Hi, it's Brenton Garron with ETF Trends and ETF Database. Today, I'm joined by Chris Humer, Senior Investment Strategist at FlexShares Exchange Traded Funds. Chris, with the US election and the inauguration in the rearview mirror, do you feel that sustainability investing and ESG will be of greater focus?
Hi, Brenton. Pleasure to be back speaking with you. Answer your question. I think we've already seen from day one how sustainability investing is definitely a key focus of this administration. He on the first day of his administration, President Biden issued executive orders entering the U.S. back into the Paris Accords. And we've even seen this through some of his nominations. For example, he's nominated Boston Mayor Marty Walsh as his Secretary of Labor, and as the Department of Labor and has taken a very proactive view of retirement holdings and stewardship through several channels. So having someone who is an advocate for ESG in that chair could potentially have further impact on how labor looks at investment. Mayor Walsh, while in his time as Boston's mayor, has committed over 200 million of the city's money to ESG investment, primarily in fixed income buckets. But generally speaking, I think this is something that's going to be of focus that will in turn have it be a greater focus for investors as well.
Great. Can you talk a little bit about how are you seeing your clients react or include ESG in their investment practices?
Yeah, absolutely. When we talk to clients across our spectrum, we're seeing ESG become more and more a part of the conversation. I think, it's a trend that we've seen for well over the last 10 years, but I think over the last year and a half, we've seen that accelerate pretty substantially. With our institutional clients, we're increasingly seeing them pair sustainability metrics with traditional financial metrics as a way to deliver ESG capabilities in addition to the ways that they look at in investments. And then obviously with our advisor clients, we're having more and more conversations around bringing ESG capabilities to their clients, because that's something that they're getting asked about more and more from their individual clients. And what we talk to them about is really advocating your ESG investment capabilities as a differentiator with your clients and prospects. What I've heard from several advisors is, if you are not talking to your clients about the potential for ESG investment, there is another rival advisor out there having that conversation with your client. So just from a differentiator standpoint, it's something that's top of mind. And for a lot of advisors, it could be an intimidating topic. And so, one of the things that we help guide our clients with is understanding the ESG lexicon to be conversable in that, understand what you're looking at and what your clients are looking for, and help them find the right solution for their needs and their goals.
Mm-hmm. And then generally speaking, you can obviously say ESG had a very strong performance in 2020. It's only 1 year, but do you feel this contradicts the narrative we often hear as pushback from investors that ESG strategies tend to underperform?
I think that's a strategy that is a legacy way of looking at ESG investment from a number of years ago, in that exclusionary strategies, like the old SRI strategies that were one way to deliver on sustainability investing and ESG goals, tended to underperform, particularly because of the exclusions of things like fossil fuels. So there was a period in time where not having that exposure in ESG products um, definitely impacted performance and definitely led to underperformance of those exclusionary strategies. I would say that maybe that narrative is not the same today as we see more and more people focus on fossil fuel free investing. But I would also say that ESG and sustainability investing has evolved over time as well. Traditionally, two ways that we look at this is through best-in-class investing, which is what we have done with our ETFs, ESG and ESGG. Those two ETFs look to take and invest in the best-in-class ESG companies in the various sectors to give core equity allocation exposure. Or the other way that we see investors do this is integrate ESG principles into other formats, whether that's factor investing or traditional fundamental analysis, where they're incorporating ESG metrics into their analysis. So both best in class and integration approaches have done well. As you talked about, ESG did really well last year. Generally speaking, when we look at ESG, the expectation from academic research is closer aligned to market-like returns with a reduction in risk. And that's generally how we look at this is sustainability investing is really looking at the long-term risks of the companies and mitigating whether that's transition risk, whether that when you talk about companies that are in the natural resource or food, agriculture or food spaces, even packaged food, and how they're sourcing their food from a biodiversity standpoint. All of those things are key levers that investors need to be cognizant of for the long-term success of those businesses. And I think that's something we saw last year in particular that weighed on markets more than it has in the past. And that's why you saw the ESG outperformance in a year like 2020.
Yeah, absolutely. All great points and awesome insights as always. So Chris, thank you so much for taking time to chat with us and look forward to speaking again soon.
Brenton, it's my pleasure. Look forward to coming back in the future. Have a good one.